David Solomon, Chairman and CEO of Goldman Sachs. So much to discuss with you about what's happening in Davos, of course, but really what's happening in Wall Street and the larger economy. But I want to start with the firm first, which is what is happening. And I think there were a lot of questions that were raised around what took place on the earnings call yesterday, where you think this is all headed, and maybe just we can start with just the lessons of Marcus to some degree, because I think a lot of people have focused, obviously, on that. Not to say that that's the future of the company, because it isn't anymore, but to the extent that there were lessons in that, and people are focused on trying to understand what you understood now about it.
Okay, well, there's a lot there. And first of all, thank you for having me. I'm glad to be here. We obviously had a disappointing quarter, and we tried to own that, up front. I think the thing that's interesting is there has been a lot of focus on the investments we've made in serving consumers and the platforms. As you know, we narrowed those.
Right.
But I think in the context of the quarter, and there was an interesting article in the Wall Street Journal this morning, the thing that really affected the quarter and the year is that we have a very balance sheet intensive asset management business. And 3 years ago, when we laid out our strategy at Investor Day, we said we wanted to reduce that because it created a lot of volatility. And we've been reducing that. In periods of easy money, and particularly during the pandemic, one of the reasons we so outperformed in 2021 was because of that balance sheet. If you look at 2021, our ROE outperformed the peer average in 2021 by 900 basis points. And so obviously in a year where for the first time in 50 years, fixed income markets and equity markets are down, the S&P is down 20, the NASDAQ's down 30, you unwound a bunch of that. And our business mix, because we have almost a third of our capital, attributed to this, was more affected. And so, we wound up, I think, with reasonable performance for the year, better than 10% ROE. But what I'm focused on is 3 years ago, we laid out a strategy to grow our banking and markets businesses. We've grown them. We've taken market share. Those are leaders. You can look at their relative performance through 2022. Look at the ROE for those businesses against who we're peered with. Those are leading businesses. It's part of our core. Our asset management business, we're executing on our strategy. We're reducing the balance sheet. If you actually look under the numbers, and you can see them now in our new disclosure, our relative asset growth and the performance of the core business is actually quite good when you stand it up against peers. So we're raising a lot of money, serving clients, growing that. There's a lot of opportunity for us in the asset management business. Now, in the consumer platforms, we did some things right. We didn't execute on some others. I think, and I said this on the earnings call yesterday, we probably took on more than we should have, too much too quickly. But I think we now have a very good deposits business. We're working on our cards platform, and I think the partnership with Apple is going to pay meaningful dividends for the firm over time. We have this acquisition of Green Sky. We think it's a good business. And so we're going to give people a clearer view. There's more transparency around how they can contribute. But everybody's focused on it's 3% of our revenues. And we're very focused.
By the way, I would tell you, I spoke to a number of investors yesterday who think that the stock is actually holding up quite well. I don't know if you agree with that. But as a result of the fact, frankly, that it is a small part of the business.
And you have a Goldman premium. I'm just wondering, what's book now? It's under 300.
No, book's over 300. Book's over slightly over 300.
Slightly over 3. So you're at 350.
I think 3.
Some people just shooting the breeze last night. I think 300 is a great spot for it because maybe the Goldman premium isn't what it used to be.
Well, I would tell you that if you look at 97% of our business, 75% of it last year, rough numbers, was on our banking and markets business. It is a world-class franchise. It had an over 16% ROE for that business. Right. We have no corporate center. That's a true ROE.